Hello guys, so welcome to the channel. So today we are going to be trying to backtest gold and equally look for potential moves for the upcoming week, okay? And it's quite interesting, and personally I think this is one of the only strategies you actually need out there, because SMC actually simplifies the work for you and it actually removes the fatigue of a lot of analysis, okay? So or a lot of screen time that you're going to be facing. So one of the main things you have to understand with gold, it's currently at the current state of the markets. We actually had a strong bullish push, but right now the market has actually been reacting strongly from this layer of resistance, and equally we have this layer of support here. Of course, we all know gold has been very bullish, and we had this break of structure here, and the market was reacting from this particular AVG here. Okay, so I'm going to backtest it much more detailedly, so I actually get to see that the SMC strategy actually works, and you should definitely learn to practice this as well, and it's equally going to uplift your trading journey. Is very, very essential. So with that being said, let's get straight to it. So sometimes for some traders, they might see this particular setup. Okay, the market is actually reacting from this level of support, and this from this level of resistance and this level of support. One can see the market is ranging, so they are not going to trade. No, that's not for you. If you're a scalper, or maybe if you're a day trader, this is the daily time frame. All right, so within this particular, let's say, bearish trend or this particular bullish trend, you can always catch moves in between those. All right, you tend to actually get away from this these consolidatory moves when you're on your entry time frames. Let's say, for instance, if you get to maybe your scalping time frame, be it whether it's 5 minutes or 15 minutes, and you see the market actually present this setup to you like this, you definitely want to avoid it. But we are on a higher time frame, and it can actually give us much more methods of entry. Okay, so now this is where the market is currently reacting from. So we'll just try to backtest gold on the smaller time frames from here to here to see that the SMC strategy actually works. Okay, so that's what you need. So with that being said, let's get straight to it. So I'm going to go to the 4-hour time frame. I'm going to refine the entry, so actually see how the market has been reacting. Let me clear off this so we can actually see the analysis together on the different pairs and the likes of that. So now what do we have here? If you take a close look at the market here, we're going down. We actually had a bearish structure here. Okay, we had this push to the downside, little rejection, break of structure, rejection, break, rejection, break, rejection, no break. Then the market then takes out literally this origin here and even this particular origin here. Okay, so we're going to see how to make it much more simpler. All right, so if I refine again, let's say to the 1-hour time frame, for instance, then this is the 1-hour time frame. Okay, and if you look at the 1-hour time frame very closely like that, you will see that this was actually the last break of structure to the downside here. This particular structure you see here, it looks very minute, but it was the last break of structure to the downside. I'll just denote with the letter B, and after that we then had a break of a change of character there. That means the market took out the current layer of what? Resistance. So I'm just going to call it a change of character. Let me just, sorry, I just give this one a break, and then I'll put another one here to denote the change of character that actually took place. And then from there, what happened? Whenever you have a change of character like this, you're literally waiting for the markets to retrace before you make your entry. Now, this concept is generally out there, but one thing nobody actually gets to tell you is once the market is actually retracing and coming to a potential order block. What do I mean by this? Let me refine further to the 15-minute time frame so we can be able to see clearly what's actually taking place. So this is still that same structure. This is the last break of structure to the downside, which I said, and then this is a change of character. It's a change of character because this is the origin, the last origin that caused the last break of structure and was taken out. Okay, so now whenever you have this structure, you're always going to be thinking of placing an order block. So the question is always, where do I place the order block? For instance, if you're waiting for the market to come, let's say you placed your order block here, yeah, you would have succeeded because once you got to your order block, definitely you would have made an entry from it. But most likely it's not going to be the case sometimes. Okay, maybe at some point you would have placed your order block around here, then the market would have come, maybe not even arrived to your order block, and then maybe gone against you, or maybe you would have even placed your order block somewhere below here and the markets never ever came to that order block. So, or maybe even you would have placed your order block maybe somewhere around here even, and the market would have taken you out. So how do you solve this problem then? Now, the easiest solution I'm going to give to you is whenever, let's say you have a change of character here, and you know very well that when you have a change of character or a break of structure like this, the market is always going to retrace to the downside to react from a potential order block. Sometimes you might have several other blocks along the way that you might be anticipating for the market to react from, but you might be wrong in where you placed your order block. So to solve that, this is one of the easiest ways to solve that particular issue. So now, whenever the market is retracing here, you see the market's coming down here. It actually formed this layer of this lower high, okay, and it caused the break of structure to the downside. Form this lower high here, then it caused the break of structure to the downside. Form this lower high. The lower highs are never taken out. The moment a lower high is taken out, that's when you should know that, okay, this is time for me to start getting into the market. Okay, what do I mean by this? Let me try to draw this again with some stuff. Okay, like from here we can see the market retrace, then we had a break of structure, retrace, then we had, let's say, break of structure from here, then retraced, we had another break of structure here, then retraced, we had another break of structure. Now from here on, the market retraced, took away this high and came right here. The fact that this high was taken out, this particular layer was taken out, tells you that, okay, this is the current layer of resistance and the market took that away. It makes you understand that, okay, we're about now to shift our move to the upside. So regardless of where you place your order block, whenever you find the market coming down in this particular pattern, the moment the current layer of resistance is taken away, then you should start looking for a modality of entry then. Now, what you then do is wait for the market to just form a little bit of liquidity and then you get in. Okay, you're always going to get your positions most of the times correct. What do I mean by that? Let me see. Okay, let's say we had this let me make it as short as possible. Let's say we had this break here. This was a change of character layer here. Okay, this is where now the break to the upside, I'll just call it the break or change of character, no problem. This change of character is for your entry. Okay, so it's different from this other one on the other side here. So what happens then is you then move to since you're trying 15 minutes, fine. Then you then move to, let me see, I'm just going to call this one, yeah, a change of character. And then what happens is, how do you now enter here now? Let's say you've identified that, okay, you have a change of character here like this. The market has taken out this resistance layer. Do you just enter because it has broken? No. What happens is, wait, the market breaks, okay, it forms a little bit of liquidity. What I'm simply trying to say is that there's always a tendency to wanting to be perfect in terms of your entry. But when you wait on this modality here, when it breaks like this and then let's say it retraces this, when you retrace, you can even just target to say that, okay, whenever the market gets here, I'm going to enter from this layer here like this. Always try to target mechanically 1:3, 1:3 weeks reward ratio like this. Bam. Even if it's to retrace, it is always a likely probability that you're always going to be in the winning position. And of course, trust me, you always go small, but mechanically target 1:3 and you're going to be in a good spot. Okay, so that's one set. Let's see how good we reacted again. Let's see if the strategy works. Let's test it one more time. So this is a 15-minute time frame here, as we can all see. We equally had a break here. There was a break here to the upside. You can call this a break of structure here to the upside, right? So since we then had this break of structure to the upside, what most traders will be thinking about doing is that, okay, literally since it's SMC, have a break, potential level of an order block literally can be around here. You can be right, but most of the times, what did the market actually reacted from here rather? Okay, you might never know. Sometimes the market might even come and react straight from FVG, not even around your order block. So what am I trying to do by teaching you this? I'm trying to make you understand that whenever you find the market behaving like this, let's say the market has retraced and come to a potential level of an order block here, what you have to do is, if you're on the 15 minutes, you can even take it down to the 5-minute time frame. Yeah, let me take it down like that and see if we can see what took place there. So let me help you out here. So whenever it comes to potential layer of an order block here like this, okay, what happens is you wait for the market, then it starts going up. Wait for it to take out the current layer of resistance. Then you see that the current layer of resistance is taken out where Like you can see that this current layer of resistance is taken out here. Okay, so this is where we had that break of structure. Once we had that break of structure here, definitely you can call it the change of character anyway. Whatever you can call it a change of character. And whenever I have this change of character here like this, now you wait for the closest retracement. Okay, the good position to have entered this market was around here, even this particular zone here. This is the good position to have entered this market here. So we had the break, then it just retraces. Okay, then you can get in a way from there. Sometimes you always target mechanically 1:3 before your positioning. Okay, mechanically 1:3. Okay, you're always going to get, even if let's say the market was to first of all come up a little before retracement, 1:3 with this understanding is always going to get you in that good spot. So let's see what the market was doing. Similarly here as well, we had another break of structure. From here you can see clearly this was the clear break of structure to the upside. So now let's see what actually did happen here. We had a break of structure to the upside, and most of the times when you have a break of structure to the upside, there's always the confusion. Where do I place the other block? Am I to place the other block around here, or am I to place the other block around maybe here, or am I to place the other block around here, and the likes of that? So this is where a lot of the confusion sometimes actually does happen in a way. But what I want to help you to understand is that if you look at it, let me go back to the 15-minute time frame. Let's see what actually did take place. I'm going to take this out of here. So if you look at it closely, you realize that okay, this is the 15-minute time frame. We equally had a break here, right? And the market seems to be reacting from here instead. So now, how do we know when to have waited for the market? We had a break, market move, okay. You need to always wait for some liquidity formation. Your potential order block layer. Even if you're waiting for an order block, you will not wait for the order block here. Neither will you be here. You can be wanting to wait for it here, but you can see that okay, the current resistance layer was not taken out. Okay, so you wait for the market. If you trace it came back right to this particular zone here. So now once we were here, you can see that if you go to the, let's say, 5-minute time frame, for instance, I'll come back there so we can be able to see it. I'm taking my time for us to see this so that it's quite explainable. Once the market was here, you always find that little change of character at the level of entry that's going to help you before you enter the market. This was the last break here. This was the last break. Remember, this is going to be around your order block layer. This was the last break to the downside. You can call this a break. And from there on, this is where we had the change of character. We did have that change of character around here. Let me make it look clear for all of us to understand. So this is the change of character around here. So now why are you going to be looking to enter here now? Once you have this break, normally the break took place from here, though. This is where that break actually did happen. You'll be waiting to actually enter your position around here. This is where you'll be waiting, because you see the market, this is the break. Let me see, put it there. Okay, no problem. So you'll be waiting to enter the markets around this particular zone here. There's no need to cram. All you just need to understand is the strategy and how it works. Like mechanically 1:3, nothing more than that. Mechanically, okay, 1:3, okay. That's always the target, like that. Mechanically 1:3 is always going to help you out in that, because the reason being that you see the market reacted from here. Many traders probably would have been waiting for the markets to, most traders, I can bet you that that trader seems to be waiting for the markets to react from around this zone here. Maybe some people just saw the market got here, getting to this point, they just entered. Now you don't just enter like that. You enter when the market dishes out what? A change of what? Character. This is the area where you can see that change of character really taking place. You can call it a change as such. This is the area where you see the change of character happening. So it now definitely makes you understand that this particular zone here is the order block zone. So it makes you understand this is where the market is actually reacting from. Okay, because this is where the change of character happens. So in effect, what I'm trying to say is your order block, the area of entry, or let's say the order block to consider, is the order block that actually dishes out the change of character, and you're going to be entering from the retracement that change of character actually gives you. All right, so let's try to go to the 15 minute and then we'll do more back testing. That's the second one. Let's see what actually happened again. Similarly here as well, you can see clearly that we had a break of structure from here to the upside here. This is a break of structure that we had to the upside. And when you have a break of structure to the upside, the same question always comes again. Traders are definitely waiting for a point to enter the market, continue the ride to the upside. So for instance, if a trader is going to be thinking of, okay, maybe this is the area for me to wait for the market before entry. Now the market took them out. Another trader, maybe they saw some FBG here and they're saying, okay, I'm going to be waiting for the market to come back to this other block here, then I enter back from here before start going up. But now another trader will even be waiting from this particular area right down here for the market to get to it before going back up. But the charts didn't get there. So how do you solve this particular issue then? Whenever the market is actually descending the way it's doing right now, your job is to do what? Wait for the current resistance to be taken out, okay, or for a change of character to be formed. So as it's coming down like this, you can see clearly that if you can't see clearly, you can always go one step below. I'll go to the 15 minute to the 5 minute time frame to actually see the modality that the charts are actually forming. From there, you can see that, okay, clearly here. Now, once the market is coming here, should I have entered here or should I have entered? No. You can already clearly see that no, those are not potential areas of entry. Now, at this layer here, you can see that, okay, here we had, this was our last break to the downside. Yeah, this was the last break to the downside here. This was our last break to the downside. Let me try to stop this video now. And we had a change of character here. This is where the change of character took place. Okay, change of character happened here. Upon this retracement, this is where your entry is supposed to have happened here. Okay, so this is what validates that you're supposed to be entering. This is the valid order block area. Because it's a valid order block area because a change of character actually took place. The last break to the downside, market cleared out that high. It broke it from here. The retracement that it forms, you're entering on this particular layer here. So you can now be targeting mechanically from here 1:3. Okay, always target mechanically 1:3. Always don't try to go beyond that. Most of the times 1:3 shortly. It's always going to help you like that. Okay, FBG was even more present here. So that's one for the road, and you can see that the market literally, if you see where it's reacting from on the left side, it was reacting from these fair value gaps that was actually produced around here. So if you want to put an order block there, it's fine. Definitely you can see that this is where the market is definitely reacting off from. It's reacting from this FBG here. That's where it's actually reacting from. But where you enter is actually here, because it's at this zone that the change of character was dished out, and then the retracement occurred, and then you enter from there. So people can keep going ahead to keep backtesting and keep seeing how we could have been making some moves of that. If we go one more step further, this is the current state of the market. We equally had another break of structure here. Permit me for the long video. We equally had another break of structure here. This is another break of structure here. And once we had this break of structure, now we had the break of structure. Okay, this is where the break actually took place. The market is retracing. Now you see this long retracement, it's coming down here. You're like, okay, what do I do in this particular scenario? Do I just since I just see it coming down very heavily like this, what do I do? And likes of that. No, the same principle applies. The market is coming down to a potential to react from a potential order block before it starts going up. But how do I know that that particular area it has reacted from is a good zone for me to enter? The simple answer is when the current resistance layer is broken to the upside. Then on the retracement, you get it. So this is the entry layer here. So if you're not seeing it clearly, I'm going to go to the smaller time frame so that we can all be able to see what actually did take place like that. So let me just go to the 5-minute time frame so you can see clearly what did take place there. So now we had a break. This was a break to the upside. Now the market is retracing. At what point is it going to start going back up? Nobody knows that. So now You as a trader now, you're thinking, oh, maybe this is my order block. Maybe it would have gone down lower than that. The reason that makes this one your valid order block here is simply because, okay, according to the 5-minute time frame, this is the break of structure to the upside here. This is the current level of, this is a break to the upside. I can call it the change of character, like that. And once you have this change of character here, broke this layer here, give you information that we're not just going down only, we're about to shift. Because you see, similarly here, this particular lower high is actually, this particular lower high is lower than this one is lower than this one, but here it didn't continue that trajectory. Okay, it actually did break the current layer of resistance, went to the upside. You're entering where this is your good zone of entry. Even if you entered here in the market, it's this zone I'm telling you about, the market always respects it a lot. I don't know why, but it's just that simple in a way. So this is where your entry should have been to the upside. Mechanically, you target 1:3. Okay, don't try to go a lot more than that. Okay, mechanically target 1:3 risk to reward ratio. When I say mechanically, I simply mean that you just use it as a standard, okay? Like that, okay? 1:3, wait for the market to come there and you get in. I'm not forcing it. You yourself, you guys are seeing it's just the same thing you have to be using and likes of that. So especially when you identify the right trend. So similarly here, we equally did have another break to the upside here. And we are going to see that, let me just call it a break. Let me head back to the 15-minute. Hopefully we don't make this video too long. So we had another break to the upside here. And once we had this break to the upside, we can see clearly that we had this break here to the upside, okay? And once we had this break to the upside, similar case scenario again, you guys can all see the market, okay, why the break is retracing here. Normally you understand that, okay, a valid order block is not necessarily going to be around here. The market is coming down, okay. Now that we are here, how do I get in here? How do I know this is the right area to get in? The same principle applies. If you went down to the 5-minute time frame to observe what was happening here and likes of that, if you can see clearly, for those who actually have sharp eyes, you see, maybe you could not see it here clearly, okay? Here at this particular juncture here, this candle actually took out this particular resistance layer. Market reacted. This was actually a very good area to enter the markets from, okay? And you do what you mechanically target. Even if it was from here, you mechanically target 1:3, like that. 1:3 mechanically, okay? Just adjusting the ratio so that you guys can equally see, like that. That's 1:3, no problem. So you can mechanically always target 1:3, like that. Okay, let's say for instance we're not able to identify this. Even if you could identify this layer here, that okay, this was the last break and then the market broke this structure. The market is reacting off this break of structure here. Like even if you entered from here, you would have still had some moves to go to the upside, right? So that's just a simple break. So for the upcoming week, right, we can clearly see that, okay, now today is Saturday, and you can clearly see that, okay, this is a layer of support right here, and we're expecting the markets to do what, to give us a break of structure. That's not giving us enough reason to keep selling the market then. So we are going to wait for a break of structure here. The break, let me go back to the 15-minute. We're going to wait for the market to produce for us a break of structure here. I'm just going to call it a break of structure to the upside. Then once it dishes out that break of structure, let me just try to use some annotations so that we can be able to understand what the market is going to give us. So now we're going to be waiting for the market to give us a break of structure. So for instance, this is what we're going to be waiting for the markets to actually dance and play. Maybe play, it gives us a break of structure. Now the market is always going to want to retrace to a potential order block. So as it's coming down, it can be coming down in this manner, like that. Okay, it's coming down like that, coming down like that, coming down like that. So the moment when this current layer is taken out, like this current layer of resistance is taken out, good, you know you're on a good setting. When it then goes, probably comes up and then now it forms a little bit of stops and retraces to the bottom around here. For instance, based on the candle formation, you're entering this way, you're to enter, okay? that's literally where you are to enter to move to the upside. Okay, that's what makes you to understand that that order block, then this is a good entry position for you to the upside for the week. So guys, let's try to observe that and see if it does not break to the upside, it can literally break to the downside, and the reverse of all what I've said is equally true. So as I said, you equally do what you target mechanically. 1:3. Okay, 1:3. Sometimes even if the market is to go against you, even when this is formed, you always ditch out your TP before even like going against you in a way. So with that being said, guys, I know the video is a little bit long, but thanks for your patience, and don't forget to like, share, and subscribe. You can always backtest it, mostly for gold, and it actually works. So see you guys in the next video.